Boom! Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. We've got a good one in store for you guys all here today. You've all been told a big, fat lie. We did a live stream just a couple of days ago talking about this big lie, and I showed you proof. I showed you proof about this lie a couple of days ago, and now we've got even more proof that this lie is unraveling even faster than I expected it to. And it seems like almost with every passing day, there's another little piece of proof about this lie that everybody has been being told for the last several months. We talked about it before. We're going to talk about it again. And we're also going to be discussing what to expect from earnings this week. You're going to be getting some big earnings. We kicked off earnings on Friday. You got a whole lot more earnings coming out here this week. Give you guys my entire game plan on what I think this market's going to be doing and what my plan is, how I plan on making money. What are some of the trade ideas that I am focusing on? Welcome to the True Trading Group live stream. My name is Michael Edward, former award-winning hedge fund trader, but now the co-founder and head trader of TTG. If you're ready to learn, trade, and profit for real, you've come to the place. 6 nights a week, Sunday through Friday, we go live right here for free. For myself, other TTG Pro trading moderators, and special guests drop golden nuggets, give you free lessons in education and trade ideas and market commentary and analysis that can help you become better traders and investors immediately. So take a moment. Smash that like button, subscribe to the channel, turn on your notifications. Make sure you guys never miss out on any of these live streams because we're dropping golden nuggets and giving you free lessons on a regular basis. But why should you listen to anything that we discuss? I did not figure this stuff out on my own. I began my career working at a fund in New York City, my very first job right out of college, and then 2008 happened. And that, my friends, that was the Great Recession. Stock market crash, the global financial crisis, but also the same year that I received one of the firm's Trader of the Year awards. See, that's where I learned how to trade. I didn't have to figure this stuff out on my own. I had to go through a 3-month educational training program while working at the fund before they let me touch even $1 of their money. Now, fast forward, I'm the co-founder and head trader of True Trading Group, the fastest growing and highest rated premium online educational platform that's available to the retail trader and investor today. See, along with my team of 9 other professional trading mods and an over 20-person staff, we help thousands of traders and investors to learn to trade and profit consistently. We take university-level trading and investing courses and curriculum, and we combine that with premium stock market tools. We do workshops and provide mentorship for stocks, options, crypto, even futures, for all styles of trading, day trading, swing trading, and also even long-term investing. See, at TTG, we take that university-level curriculum and we combine it with today's top financial tools. Listen, these are tools successful traders use that give them more information, that help them make better decisions, that increases their chances of success. They're using them, so should you. The problem is they're expensive. They cost you around $5,000 a year if you were to go to these companies on your own. Benzinga, Quote Media, TradingView, Trade Ideas, ETNA, CBOE. You go to these places on your own, you're spending about $5,000 a year. We've negotiated deals with those companies to put their products on our platform at no additional cost to you. Right away saves you about $5,000. You're also going to get access to the TTG members. Over 10,000 of the most educated, helpful, supportive, and successful community of traders and investors you will ever find. And of course, you'll get the real-time trade alerts from myself and the other TTG moderators that have been able to support a cumulative win rate amongst all of us together of just around 80% now going on the last 2 years. So again, if you guys are new to the channel, make sure you subscribe, smash that like button, turn on your notifications, and share this stream on your own social media. Share it out there, put it on Facebook, put it on Twitter, whatever you guys want to share it on your own social media. Let's reach out, let's educate and empower as many retail traders as we possibly can. So we have a lot to talk about here today, guys. Like I said, there's been this big fat lie that has been being told by Jerome Powell, by other members of the Fed, and by the media. And we talked about it a couple of days ago, and we're going to have another conversation about it again here today. In order to help me have that conversation, everybody give a big warm welcome to my business partner and co-founder of True Trading Group. Everybody say, hey, yo, to Adam.
What's up, buddy?
What's going on, man? How are you?
Good, good. I got my co-host tonight. His name's Martin.
Ah, the new puppy. That's a cute dog, man.
Say hi, Martin. We have laptops. We have laptops.
Everybody, well, thank Martin for getting you guys laptops.
Yeah, Martin. Martin costs as much as a Best Buy. Anyways, we'll put him back in the pouch. We'll put him back in the pouch.
Yeah.
Oh, all right. So, welcome. So yeah, let's get into it. First off, let's talk a little bit about what the original lie was here, right? The one that I'm referring to specifically is essentially why Jerome Powell and the Fed feel they need to be so hawkish when there's so much evidence to inflation peaking and progress and things like that. So let's start there, and then we'll get into why it's unfolding.
I will literally, with one white square, show you on my chart why the Fed feels they have to lie. This is why the Fed feels like they have to lie. Because when Jerome Powell came out in July and gave his speech and gave his statements to the world, they mistakenly took his words for dovish, thinking that the Fed felt like they had inflation under control, felt like they were not going to be as aggressive with interest rate hikes as people might have initially thought. And that really pissed Jerome Powell off because in July and August, the market got ahead of the Fed. The market started to price in rate cuts. The market started to say they're not going to raise rates as high as we think or as high as we initially thought. And Jerome Powell never said any of these things. But his tone when he spoke in the summer was way more dovish than his tone now, even though inflation at the time was 9%. Now you're looking at inflation at 6.5%. And he's way more hawkish now than he was even back in June and July. And the reason why he had to say that, it has to continue with this lie, is because if Jerome Powell was to ever come out and say, guys, inflation's doing exactly what we want. We're actually really happy with everything. And we might not have to raise rates as high as we thought or keep them as high as we thought for as long as we thought. The market's going to rally on the back of that. And the first thing that'll happen is interest rates are going to start to come down, which means mortgage rates are going to start to come down. All of it's going to become a lot easier and cheaper to borrow money. And you're going to get an increase in consumer spending, an increase in consumer borrowing, an increase in small business borrowing, an increase in just consumer demand and GDP activity in general. And that's going to make the Fed's job of bringing inflation back down to 2% even harder than it already is. That is exactly what happened in July and August. Interest rates came crashing down in July and August. Mortgage rates came crashing down, and the Fed was furious. They're like, guys, inflation, this is a serious issue. Nobody is taking this as serious as we think that they should. And then ever since that happened, I'll tell you exactly where everything changed. And again, I'll draw with one box. Everything changed right there on this day. What was this day? This was the Jackson Hole Conference. The Jackson Hole Conference on August 26th, Jerome Powell came out and gave his speech. And his speech was the most hawkish speech I've ever heard from any Fed member in my entire investing career. And it's certainly the most hawkish speech I've ever heard from Jerome Powell in general. He came out and basically scolded every single Wall Street participant in the world with his speech. And that's when you knew Jerome Powell wasn't playing. And ever since then, their message has been as hawkish as you could possibly imagine, so that the market does not get ahead of the Fed. The markets do not start easing financial conditions, because when interest rates begin to go down, that's financial conditions easing. The Fed doesn't want that. It makes inflation to come down to 2% even more difficult. The Fed doesn't want that. And that is why for the last 6 months, 7 months, they have had to come out and be as excessively hawkish as they possibly can to try to convince the market that they're serious and that they mean business, so the market does not get ahead of them.
Yeah, except for the fact that if and here's where this kind of unfolds, right? You know, we also spoke about, before we get into the unfolding, we also spoke about why this was, remember we spoke about why this is good and bad, right? For everyone that was involved, for everyone that was in the market right now. You know, we touched on the fact that it was, you know, that this lie isn't a lie that you want to, you know, scream from the rooftops and let everyone else know, because we want to take advantage of what's happening here for as long as possible, because this is something that we know isn't going to be here forever, but like it's really, after we get into how it's unfolding, it really isn't going to be here for that much longer anyways.
Yeah.
It's going to be, essentially, they're not going to be able to continue to lie about it. But do you remember, if you want to touch on that, Mike?
Exactly which part are you referring to?
I'm talking about the part, like,
why it's good and bad, or
why that it's one of those things where it's a double-edged sword, because you don't, if everyone thinks that the end is near, then everyone is going to continue to trade emotionally and panicked and whatever, and those that are educated are going to be able to really kind of navigate this market with a clear head, with a lot of an advantage.
Yeah.
All of the stuff that Jerome Powell was talking about and everything else is all supposed to be, data driven. And, we have to look at the numbers. We have to go by the numbers. And the fact here is that, if you're preaching, go by the numbers, and you're looking at the numbers, then that's all the proof we need to know that you're full of crap. And as long as you want to push that narrative that, there's going to be a tremendous, pain and all this stuff, you can push it. But the numbers and what we're seeing aren't reflecting, it's not, his words and what is happening are not the same.
Yeah, I mean, the data has held up over the last 2 weeks. What has happened in the markets have moved higher in the last week and a half to 2 weeks. And the reason for this is because the data so far is showing that inflation is coming down pretty quickly. And it shows that consumer demand and the labor market is holding up a lot longer than people initially expected it to. A lot of people thought that by now you start to see the cracks in the labor market. The labor market it's a very lagging indicator. It's always the last piece of the economy to crack when you do get a type of a recessionary environment. But people expected to see those cracks start to show their face already, and they still yet have it. Now, not to say that you don't start to see some of these things unfold as the year goes on, but the whole doom and gloom world ending type of scenario that you got from a lot of people, like Jerome Powell even came out and said households will feel pain. I've never heard a Fed member in my entire life say households will feel pain. Households will feel pain, like for him to say that so specifically. Now, if you're the average consumer and you heard Jerome Powell say that, what are you going to do? You're going to batten down the hatches. You're going to stop spending, frivolously. You're going to stop discretionary spending. You're going to really kind of tighten your belts up. And that helps bring down inflation. Like, to hear those type of things, I was never in the camp, ever. You go back to all of our live streams in 2022. I never believed we were going to have some doomsday 2008 or worse type of scenario that you saw a lot of people in the media and everybody calling for this stock market 80% crash coming, or recession, never mind recession, depression, get ready. I've never been in that camp ever. Okay, I've never been in that camp. And I still don't believe that you're going to have that, but that lie that everybody was telling about looking for that severe recession or that, worse than 2008, it's nonsense. I think you're just going to have my base case has been a mild recession, not anything that is going to be as severe as what you saw happen in 2008, like a lot of people were calling for. But the Fed
people need to stop verbally and any other way associating what's happening here with 2008. Yeah. It's ignorant. It doesn't bode well for any sort of argument.
I traded through 2008. I was on Wall Street for 2008. This is not 2008, and you have a lot of people that still continue to try to push that narrative. And all you've got the last couple of weeks is the probabilities of a soft landing have actually gone up. But
it went from, in December, it was just above 70%, and right now it is 60%.
Well, that's for recession.
Right. Okay.
So the opposite numbers for soft landing. So it was 30% in December. Odds of a soft landing were 30%. Now it's 40%. You still have more than a 50% chance of a recession.
But not much, man. I mean,
yeah,
60-40 is not a foregone conclusion.
Yeah. Listen, I think that, that those probabilities are going to continue to change. The data that came out over the last 2 weeks supports soft landing. Now, you might get data that comes out over the next 2 weeks with earnings that support recession. And those, and that's something we'll talk about today on this live stream as well, is the earnings that are coming up over the next 2 weeks are going to be huge. And, that data could change. And you're going to get this scale of probability between soft landing and recession is going to continue to jostle back and forth as you get jobs data and as you get earnings data.
Yeah. So the Fed is essentially, so to wrap this part of it up, the Fed is essentially the Fed and the media who are buying into it for separate reasons. I mean, they're, the media goes to wherever they can get the most clicks and the most views. And fear sells a lot better than, hey, things may be okay. Well, now we get into a spot where you got Barclays and you got I sent you the stuff earlier, Mike.
Jamie Dimon.
And Jamie Dimon are now coming out, saying certain things. I mean, Jamie Dimon, said, be prepared for a hurricane, is what he said.
Yeah, not too long ago, Jamie Dimon came in. Jamie Dimon scared the crap out of the stock market in May. When at an investor conference, Jamie Dimon told the world that people should prepare for an economic hurricane. His exact words were, prepare for an economic hurricane. Now, over these last couple of days, Jamie Dimon has now said, it looks like it's just going to be storm clouds.
Right. And then a drizzle next week, huh?
Yeah. Well, yeah. So his exact words went from economic hurricane, and now Jamie Dimon, who is the CEO of JP Morgan. For those that don't know who Jamie Dimon is, if you don't know who he is, he's one of the most well-respected names on Wall Street, and his words carry weight. He literally crashed the markets in a day back in May. I don't remember exactly which day that it was. It may have been this day.
Whatever it was, but he has influence.
Right. He has influence. So when he says things, people listen and markets react. And the markets went down significantly when he said that, expected economic hurricane. And now he came out and says, now it just looks like storm clouds.
Right.
So that's one thing that you're hearing people's tones start to change. And although these people's tones changing, it's not necessarily that you have people saying, oh, never mind, no recession. It's just going to be Goldilocks and the market's going back to all-time highs and everything's going to be fantastic. But you're hearing less and less and less of that doomsday scenario, that big fat freaking lie that every single media outlet, that a bunch of people on YouTube and a bunch of people that, post
because you got to sweep it under the rug, man. You can't.
Well, those people, how do they make money? They make money by getting your attention. They make money by getting you to click on their video or to read their article. They don't make money by you actually making money. They just make money by your attention. And how do they get your attention? They get your attention by scaring the ever-living crap out of you, because fear is the easiest emotion to play off of and is the single most effective form of advertisement. Is to scare the crap out of you to get you to read or watch whatever content that person or that network is putting out. But less and less and less of that you're starting to see. Now, I've been very vocal. I never thought that was going to be the case, and my stance has remained the same the entire time. Mild recession. That has been my stance back from 2022. It remains my stance now, and that's something that is realistic, and that is something that is very opportunistic for people that are in this market, that don't fall victim, that don't listen to the lie, that don't batten down the hatches and wait for the stock market to go back to, wait for the SPY to go back to 240 or 220. Like people are talking about, oh, we're going to go back to the COVID low. No, you're not. Right? They're waiting for the market to go down 80%. You wait for the market to go 80%, you're going to be waiting your entire life. And
but in fairness, though, for those that are educated and know what they're doing, you need people. I mean, look, you don't want people to lose, and you don't want people to get hurt, but you also look, trading is two-sided, man. You need a buyer and you need a seller. And in order to get things at dirt cheap prices, and in order to get your hands on all these stocks at a really low price, you unfortunately need people to think that way, to be that emotional, to be that impulsive.
Absolutely.
So, if somebody thinks the market's going back to the 200s, I mean, just, they're gonna sell their stuff and batten down the hatches, and hopefully you're smart enough to buy their stuff.
Listen, I think that you've got this move to the upside that you've seen. Honestly, this has been a fair move off of those October lows, and now you're looking at this rally that you've had over the last week and a half, and you go into earnings. Even if the markets push a little higher from here because of better than expected earnings, I think that it's just a delay. And then, you'll have a situation where that rug will get pulled out. The markets will drop back to the downside. And then you're going to hear all those people, the people that are starting to get very quiet right now, all the doomsdayers that are very, very quiet right now. They were as loud can be in October, right? They were the loudest people in the world. They're very quiet right now, but you're going to hear them come back out when that happens. They're going to try to scare everybody. Everybody will panic out. And my friends, that is when I'm going to be doing my buying. That is when I'm going to be absolutely doing my buying. I'm going to take advantage of that situation. Members are taking advantage of that situation. The playbook for 2022 was trade that down market. We're in a bear market. Understand you have bear market rallies, but at the end of the day, we're still in a bear market. That was the playbook for 2022. We're going to ride that through into 2023. And members of True Trading Group have been doing very, very well. And even in this environment, which has been a challenging environment, a lot of people never traded through or lived through a bear market before. You have a lot of people that maybe even are on this live stream. You only got involved in the market after the COVID crash and with the meme stock craze or the Dogecoin craze or whatever it is. And you just got involved in the markets in 2020 or 2021. You've never seen a bear market before. This is new to a lot of people, but yet still members of TTG are having some of the best years they've ever had in their lives. Members are making money in True Trading Group. The vast majority of them are, and I'll prove that to you. Don't take my word for it. Guys, anyone that's on this live show right now that is a member of TTG, if you are a member, do me a favor and type the $ in chat right now. If you're making money and you're becoming better traders because of True Trading Group, just type the $ in chat right now. Just type the $ in chat right now if you guys are making money and you're becoming better traders. Just type the $ real quick. Anyone that's not a member, just pay attention to how many people are going to type the $. These people aren't smarter than you. They don't have more time than you. They don't have more money than you. They don't have more experience than you.
Well, some of them may have more experience now.
Well, yeah. But the point is, guys, the point is that these people are just like you. They've lost money in the markets before. They've got full-time jobs or they got small accounts. They've been scammed by some other BS group before. But yet now here they are telling you they're making money in a down market. A year when your 401k is probably down 20% or your long-term portfolio is down even worse if you're holding on to meme stocks or Kathy Wood stocks, your portfolio is down 60, 70, 80%. I mean, some people are really in a whole world of hurting right now by making poor decisions and falling into the hype and falling into the wave of social media. The wave of social media will never be in the front. The wave will always be in the back. Always. Social media is never going to be they're never going to be in the front.
You know what it is? It's the new cab driver.
It's the new cab driver?
Yeah, so you remember that old saying that by the time your cab driver tells you about a stock pick?
Oh, yes.
That it's too late. It's like the same thing. By the time social media hears about it, it's too late.
Yeah. Good point. Yeah, it's a new cab driver. Yeah, I agree with that. I really do agree with that. And you just continue to follow that wave, you're always going to be a step behind. You're always going to be selling when you should be buying, and you'll be buying when you should be selling. You're always going to be behind. But members of True Trading Group, you guys, I'm telling you, you see from them, firsthand. They're making money. They're becoming better traders, even in this environment. And if they can do it, so can you. These aren't bots. These are real people. They found True Trading Group the exact same way that you did, and that's on one of these live streams here tonight. And here they are, now reaching their dreams.
So it's essentially what's taking place right now is this lie to kind of keep inflation in check, right?
Yeah.
it was working, but then last CPI, it didn't really work as well, but it worked. And now what's happening is that it's almost like the market is pricing in Jerome's BS.
Well, the bond market, you bring up a really good point, Adam. The bond market's been pricing in his BS for months.
Right.
And I did a live stream. If you guys have been following the channel for a while, I think it was right after your CPI number. I'm sorry, it was after the Fed meeting in December. So it was this day. I'll show you on the chart. So this was the CPI number, and then that was the Fed meeting, right? And during that Fed meeting, Jerome Powell and the Fed came out and said, yeah, we just got 2 consecutive months of lighter than expected inflation, but we're raising our target for the Fed funds rate to 5.1. Prior to that meeting, it was below 5. It was in the 4.9 or 4.88. It was below 5. Now they get exactly what they were looking for in the inflation data, and they said, we're moving our target to 5.1. If the bond market actually believed that the Fed was going to raise their Fed funds target rate to 5.1, you would have seen yields shoot significantly higher that day. That did not happen. You have a 2-year treasury right now that's floating around 4.2 and a half. If the bond market genuinely believed that the Fed is going to move that rate all the way to 5.1 or even 5.4, or I expect the Fed to come out and again move that target. Don't be surprised if in the February meeting, they're like, our new target's 5.35. Like, don't be surprised they move that target again and they keep playing that game. But the bond market doesn't believe that they're going to actually get there. Now, the reason why they don't get there is up for debate. But the bond market would be, the yields would be higher if they actually believed that that the Fed was going to get as high. Like, you have all these Fed members like, oh, we think 5.4. You're not getting the 5.4. They're not getting the 5.4. I don't think they are. And the bond market doesn't think they are either. They always say the bond market is the smartest minds on Wall Street. And one of the things that they all also say is that the bond market leads, equity markets follow. So when you learn and understand the correlation and what's going on in the bond market, it gives you a really good understanding and what to expect from the equities market, because the bond market leads, equity markets follow.
So yeah, I mean, essentially what is taking place is that they there's too many things to the contrary that are taking place right now. And I wouldn't be surprised. We all saw CPI come in. They want to say that it came in as expected when they adjusted expectations like 24 hours before.
That was such BS, dude.
Yeah,
100 hours before.
It is laughable to the extent that they are going to pull this over everyone, right?
Let me thank you for bringing that. Let me hit up for anyone that's watching that doesn't know what you're talking about. Let me just 2 minutes. Let me explain what happened. You got your CPI number right last week, and that CPI number came in right in line with the expectations. However, what they failed to tell you is 48 hours before the numbers were released, they changed the expectations. The expectations were 6.7 headline year-over-year CPI. And the expectation was for month over month of 0.0. Those were the expectations. 48 hours before they released the CPI data, they adjusted the expectations to be 6.5 year over year and negative 0.1 month over month. Wouldn't you know, the CPI numbers come out 6.5 year over year, negative 0.1 month over month. What a shock. So now instead of CPI coming in under expectations,
right, which would have moved the market significantly to the upside.
Right, CPI comes in right in line with expectations. That's the part they don't tell you. It all starts to make sense. They can't let people think the coast is clear. And I'm not telling you, listen, I think we're going to have a mild recession, but that they can't come out and tell you that everything's going to be fine. They came out and tell you that, hey, we're winning. Hey, inflation's coming down. Hey, the labor market is still holding up really well. They can't come out and tell you that because you just got consumer confidence. Consumer sentiment reports came out last week, 64 when expectation was 60. There's a direct correlation between consumer confidence and consumer sentiment and consumer spending. There's also a direct correlation between consumer spending and inflation.
Yep. So essentially what we're saying is the lie that is being unfolded here right now is the fact that you have a Fed meeting coming up February 1st. Jerome Powell, I think a lot of people are going, depends on what they say in the Fed meeting, but what's it predicted at right now? 25 is most likely?
Yeah, most likely you're going to get a 25. I think, I got to check what the most recent probabilities are. I didn't check what the most recent probabilities are.
Yeah, I mean, I think the most recent probability was, I think, 25%.
Yeah. I think you probably are at a 70, 60, at least a 60, 65% probability of 25. But I have to check on that. Don't quote me on that.
Yeah. So, and it was 50 the last time, right?
Yes.
So inflation's coming down. You're going to get more than likely a 25 basis point hike, which is down significantly from 75 and 50. The jobs market is still strong. Consumer sentiment is coming in high or higher than what was expected. I think that people aren't, I don't think the market is going to react as volatile and with, to the downside as this comes out. I think that ultimately what is going to take place here is that people are just going to not worry about what he says, and they're just going to look at what the numbers are.
You're 100% correct.
Because honestly, we've all been so attached to every word that this man has said,
Yeah.
that now it almost doesn't even matter anymore, because what he says, what he does not say, doesn't hold as much weight as it did 6 months ago. What matters is, hey, Jerome, did you and the Fed bring it down from 50 to 25? Cool. Is CPI number going in the right direction? Yes. Cool. Is consumer sentiment up? Cool. Housing prices look like they're coming down? Cool. Hopefully they'll find some chickens and eggs will come down from $7 a dozen. Cool. No one's going to give a shit how he answers Steve Leisman or anyone else at these press conferences, because everyone's wise to it now.
Yeah. I got to be honest, I don't think it matters as much. Like their February Fed meeting, whether they do 50 or 25, I don't really think matters all that much. Because if they do 50 in February and 25 in March and then pause, it's no different than if they do 25 in February, 25 in March, and 25 in May. You still get to the same place. And I think that's how the Fed, and then the Fed pauses. I think the Fed is going to do 75 more basis points, and then they're going to pause. They're not going to get to like a 5.4, like how you have a lot of the Fed members are calling for even higher than the 5.1 expectation that the Fed set at the December meeting. So I don't even really think it matters. Because the market's going to look through it to say, well, if they give us 25 basis point hike, if they give us a 25, you might have 2 more hikes to go. If they give you a 50, you've got 1 more hike to go, and then the Fed is pausing. So the market either way, I think, is going to take that Fed rate hike as this is the beginning of the end of the hike cycle. And then it becomes a matter of, do earnings and the jobs market hold up? The longer, and this is the direct correlation you're going to see this year, the longer the labor market and earnings hold up, the more probable a soft landing becomes. It's a race against time, because everyone knows that when the Fed raises rates, it has a lagging effect on the economy. So the longer that earnings and the labor market hold without breaking, you're going to get the probabilities of a soft landing increase, and the markets will then rally on the back of that. So it really just becomes a race against time. And then once the markets do show you that, once you do get a crack in earnings, or if you see a crack in the labor market, then you'll get the turnaround. But I don't think it's going to be. I don't think the turnaround is going to come from the Fed. I don't. I think the turnaround comes from. From earnings or the labor market. That's what I think. Who's on the live stream right now, guys, that is not a member of True Trading Group? I'm curious here. If you're not a member of TTG, just type the letters TTG real quick. Literally, just type the letters TTG if you're not. I know it might sound tedious. I want to see who's on the live that's not a member. I want to see who we're dealing with here. Just go ahead and type the letters TTG if you're not a member of True Trading Group. I want to see. Jonathan Wilson, it breaks my heart every time, brother. Breaks my heart every time. Think Capital, Day Trader, A-Click, Mega Mark, Crystal Assassin. We've got J Kill, Dr. Strider, Mira, Robert, Balls, Invest for Life, James G. Diddy, Khalid, Jalor. We got a handful of new members that are with us here or viewers rather, people that are not members of True Trading Group. Tom, how are you? Think Capital says, what do you guys offer at True Trading Group? You know, I'm glad that you asked. I'm glad that you guys asked. Make sure you guys all subscribe to the channel. But let me do this. Let me explain to you guys. I'll share with you real quick. Think Capital is asking, what do we offer at True Trading Group? We got a couple of people that are asking about what the membership does include. So someone just goes, we offer education. Somebody goes, yes, we do, but a lot more than just
real quick. We had 100,000 the other day, and YouTube took away like 50 of them. I have no idea why.
There it is.
There it is. I'm not going to get too excited because YouTube, this is now here, hang on. I just want to show everyone something real quick. This is now the third time, I suppose, that YouTube has done this. So we hit 100, 209, and then back down to 99, 99, 892, and then back up to 165, 174, back down to 99, 971. And then now we're at, there it is.
Oh, see? Yeah, there you go. See? It's like we're trying to break through this 100,000 resistance. Guys, get us through this 100,000 resistance. If you're not subscribed to this channel, get us through this 100K resistance, guys. Go ahead and subscribe to that channel right now for us, please. It would mean the world to us. Thank you so much. We love your continued support of the TTG channel. So go ahead and subscribe to the channel, folks, if you guys have not done so already. Thank you so much. Let me just tell you guys and share with you about what you're going to be getting with your membership to True Trading Group. Somebody was asking about what do you guys offer. TTG is an entire platform. Guys, don't go anywhere. I'll spend about 3 minutes. I'll tell you about the membership very quickly because we do have the special.
Mike, I'm gonna bounce off. You got this. You have an amazing evening. You and Joe are gonna be doing great. I gotta go put my new son to sleep.
Right, cool.
Good night.
Enjoy. Everyone say bye to Martin, the newest member of the TTG family. Martin, right? I love how he puts his hands together like that.
Yeah, dog. He's fucking namaste.
Namaste.
Namaste. He's praying for a good night. Please sign up. Okay.
He's praying for Tesla to bounce. All right. So yeah, guys, don't go anywhere. I'll tell you about the membership for like 3 minutes. We have a special discount for you guys tonight. The price does go up tomorrow. We have a free laptop for anybody that does join here this evening. And I also offer double your money back guarantee with our membership. I'll tell you about it in just a moment, but we still have a lot to get into. I still want to talk to you about what I think the markets do this week. I want to get into the key earnings that are coming out this week, so you know what companies to pay attention to and what we're going to be listening for from those earnings. So don't go anywhere. We still have a lot to talk about there. But when you join True Trading, if you guys have to realize you're joining a platform. This is not just some Discord room where I'm just going to tell you what I'm buying and selling. True Trading Group is so much more than that. It's an all-inclusive membership. It is an entire platform. When you guys join the TTG family, that's going to be giving you access to a simplified version of the education that I received when I worked at the fund in New York. I went through a 3-month educational training program and I worked at that fund in New York. Okay. I've simplified it. The other moderators have also expanded on it. That is the curriculum and the courses that you're going to get access to when you join True Trading Group. But you also get access to $5,000 worth of tools from some of the top trading companies that are out there. Included with your membership is Benzinga Pro's real-time newsfeed, TradingView's premium charts, the Trade Ideas scanner, full book level 2 from Quote Media, options flow, unusual options activity, dark pool data, a simulator from ET&A, short data, insider buying, insider selling, analyst ratings, a trading journal, social sentiment scanner, so you always know what stocks are being talked about most on social media. All of these tools are included with your platform. You do not need to pay $1 extra for any of those tools. Every course, every tool is included with your annual membership to True Trading. We spent years building relationships with those companies so we can put their products on our platform at no additional cost to you. You guys can the membership to True Trading Group, it's normally $2,212. But tonight, by using coupon code TTG121, you can actually get a 50% discount. It brings the price down to $1,100 for the entire year. That $1,100 includes every single course and every tool that I just mentioned. There are no upsells for those courses or tools. They are all included for that $1,100 membership price. You just have to go to ttgoffer.com, enter the code TTG121. Anyone on this live stream that already pays for Benzinga, that already pays for TradingView or Trade Ideas or Quote Media or Dark Pool Data, then you already know how valuable that those tools and this platform membership could be by just giving you access to those tools. Never mind access to all of the trade alerts from myself and the 9 other trading mods at TTG that have been able to maintain a cumulative win rate of just around 80% now going on the last 2 years. But even if you never took a single one of our trades, you're getting access to $5,000 worth of those tools that can greatly help improve your trading and your trading results. Included with your membership tonight is also going to be a one-on-one mentor session with any one of the moderators that you choose. This way we can really start you off on the right foot, go over any weaknesses that you're struggling with and work on what are the causes and what adjustments can we make to improve on the results. But you're also going to get a free laptop. We have 15 laptops available for this evening. Once those 15 are done, Adam tried to get more today. We were unsuccessful. So we have 15 remaining from the batch we got from last week. So anyone that joins here tonight, well, not anyone, the first 15 people that go to ttgoffer.com, enter the code TTG121, you'll get that 50% discount for the $1,100. You'll also get a brand new free laptop. We cover the shipping. We ship anywhere in the world. We have over 10,000 members of True Trading Group that are represented in over 100 different countries. So as long as you live on planet Earth, we will get you that brand new free laptop. We cover shipping. Okay, it's free, literally. It's about a $300 retail value. You guys can use it to trade with, use it for work, give it to your kid for school, sell it on eBay, put that money back in your trading account. I don't care, whatever. It's our gift for you for joining the family. The first 15 people to join will get that. You'll also get a double your money back guarantee. I know that I come on here and I know I talk a big game on these live streams, guys, but I back it up with my own money because I truly believe and stand behind the platform that we've created. And I see the results that members have. You saw the results that members have when I asked earlier, anyone, if you guys are making money, go ahead and comment in chat. You saw how many people were commenting, so you've seen it for yourself, but I back that up. If you join True Trading Group, this is actually quite simple how it works. You have all year. You don't have like 14 days to complete some ridiculous task. You have all year. Go through our courses, pass the quizzes, attend one study group. We do study groups every Thursday. Do those 3 things. If you can't make back the $1,100 membership fee at least once during your membership, I'll give you back $2,200, double what you paid to join our platform. I'm dead serious. I have no problem offering that to you guys because we've actually only had to give a refund to 2.8% of our entire user base going back to 2016 when we first launched to the public. We also have a 78% retention rate, which means 78% of our members are renewing their membership. So I can very confidently offer you that double your money back guarantee. I don't think you need it, but it's there to hold us accountable. It's there to give you peace of mind. And I come on here and I tell you, hey, if you guys are looking for the right education, for the right tools, for the right community, join True Trading Group. If we fail you, then I think we need to be held accountable for also wasting your time. You'll put up $1,100. I'll put up $1,100. If you make the $1,100 back, great. I'm going to keep yours. If you don't, I'll give you yours back and you can keep mine. And that I think is a fair trade. At the end of the day, you're here to make money. You're not here to just make your money back. You're here to make money. That's why you're on this live stream. And that is exactly what the True Trading Group platform is designed to help you do. You don't have to just be someone that sits in front of your computer screen all day long because we also have a mobile app that allows people that can't be in front of a computer to still benefit from the platform and follow along with what we are doing during the day. That mobile app will let you see the screen share, listen to the audio commentary because the mods and I are with you all day, every day, sharing our screen, talking on the microphone. We tell you what we're buying and what we're selling before we actually do it. We are not micro scalpers. We're not in and out within 60 seconds. Okay. Our day trades last several hours long. Our swing trades several days, sometimes even several weeks. Okay. Use that mobile app and you'll get real-time push notifications sent directly to your phone when a moderator enters or exits a trade. And that's how you can follow along and benefit from everything that's going on during the day, even if you're not in front of your computer. It's available on iPhone and Android. It's totally free. It's part of your membership when you guys join. So you'll download that app, use it. That's how so many of our over 10,000 members of TTG that have full-time jobs and can't be in front of their computer, that's how they do it. And that's how you can do it too. So go to ttgoffer.com, enter the coupon code TTG121, click apply code, the price will drop to $1,100. After midnight tonight, it's going back to $1,350. You can save $250 right here tonight. And you'll also get a brand new free laptop. You'll get a one-on-one mentor session with any of the mods that you would like. And you get the double your money back guarantee. If you have any questions about this membership at all, you have questions about me, you have questions about any of the other moderators, you have questions about the platform, the courses, the tools, whatever, send us a text message. Don't hesitate. We're a full open book. There's a number at the bottom of your screen. Don't call that number. Text it. 786-505-4049. Again, 786-505-4049. Text that number if you have any questions. Also, if you are a current trial member, you are a previous trial member, or you are a previous annual member, and you guys want this deal, you have to text us. We have to whitelist your email so the coupon code works. So you also text the number at the bottom of that screen. So go to ttgoffer.com and then enter the code TTG121, click apply code. Price drops to $1,100. As long as you see a laptop in your checkout cart, that is how you know you're getting one. You don't have to enter your address. You're going to get a welcome email after you join with instructions how to claim the free laptop. All right. So even if you're watching this live stream after it's already aired, as long as you see the laptop when you go to ttgoffer.com, that's how you know you're getting it. Once 15 transactions are completed, the laptop will no longer be there. Okay? The laptop will no longer be there. All right, guys? So there you go. So that's ttgoffer.com, coupon code TTG121. All right? We got to welcome Kevin. Everybody welcome Kevin. Kevin's the newest member of the group. We're down to 14 now. We're down to just 14 of those laptops. They're going to go quick, folks. I would jump on them, grab one now. You guys, it's going to be, the price is $1,350 tomorrow. So if you've ever thought about, or if you've been curious, or you've ever wanted to join the platform, save the $250. It's $1,100 here tonight. So just go to ttgoffer.com and use that coupon code. And guys, like I said, even if you thought I was the worst trader in the world, which I assure you that I am not, okay, you're going to get access to $5,000 worth of tools. You're getting Benzinga Pro's newsfeed. You're getting the Trading View charting system, premium charting system, the Trade Idea Scanner, Quote Media, the full book level 2, unusual options activity, options flow, dark pool data, a social sentiment scanner, analyst ratings, insider buying, insider selling, short data, a trading journal. All of this is included. A simulator from ETNA. All these things are included. But if you went to those companies directly to pay for those products, easy, $5,000. So go to ttgoffer.com, guys. TTG121 coupon code. All right? So you guys have it. And again, if you have any questions, just send us a text message. 786-505-4049. And again, there's a lot of people that are maybe even on the fence. And I assure you, there's a lot of members into your trading group that were skeptical at first. Now their only regret is they didn't join sooner. My TTG fam, type the number 1 in chat for me, please. If you were skeptical at first, now your only regret is you did not join sooner. Just type the number 1 in chat real quick. If you're watching this live stream and you are on the fence, trust me, you're not alone. You can comment how many number 1s or try to count how many number 1s that you guys see. That's why that double your money back guarantee is there. I want you guys to hold us accountable. All right. I want you guys to hold us accountable and give you peace of mind. Hold us accountable and give you peace of mind. Okay. Okay, guys. Let's go back over to the charts. Let's hit on the SPYs. All right, let's head on back over to the charts and let's get over to the SPY. We'll talk about what we expect to kind of happen here this week. The market is just kind of pushing right up against this 200-day moving average. And we've actually not traded above the 200-day moving average for more than 2 days since April. So the last time that you were back above the 200-day moving average, okay, it's actually March. It's actually March. So the last time that we were above the 200-day moving average, okay, for more than 2 days was this moment right there, about 2 weeks worth, about a week and a half to 2 weeks, okay? That's the last time that we were above the 200-day moving average. We briefly pierced above it for just 2 days there, and we traded above it but closed underneath it the day that you had your CPI. Now, on Friday, we closed above the 200-day moving average yet here once again. Now, as we head into earnings are going to be the deciding factor on what I think the markets really do this week. So this week is a little bit more of a reactive week rather than sitting and trying to predict price action in the market. I'm going to try to be reacting to earnings because earnings are the next shoe to drop. So everything that has happened and has transpired in the markets up to this point is going to now look into earnings. 2022 was all about inflation and the Fed. Inflation and the Fed. What's inflation? What's the Fed going to raise rates? That was the storyline of 2022. That will not be the storyline in 2023. The storyline in 2023 is going to be inflation's peaked and is coming down. The Fed has paused. Now do earnings and the job market hold up? Because if they don't hold up, that's how you get the recession. If they do hold up, that's how you get the soft landing. That's the focal point of 2023. 2023 is no longer about the Fed and inflation. It's about recession or soft landing. I am in the recession camp, but I am in the mild recession camp. I think it's a recession that could last, just a couple of quarters. It could be a recession that I do not believe is accompanied with a very sharp increase in unemployment. It is a recession that I believe sees a modest adjustment to earnings expectations. It is not a 2008 scenario. That has been my stance since 2020. I still stand by that stance. Okay. I still stand by that belief and by that thought process. Okay. And I've been investing accordingly. right? I've added to my long-term portfolio twice in 2022. One was at 3,800 on the SPY. The other was 3,600 on the SPY, the 3,600 being a much bigger chunk of a buy at 3,600. And I still have money on the sideline that I'm waiting to deploy in the 330, 3,300, 3,400 area, which is the area that I think the markets will go to as the recession arrives. We have to welcome William. William's just arrived. William, welcome to the family. Everybody, welcome William. We're down to now just 13 of those laptops. Go to go to ttgoffer.com. Okay, ttgoffer.com. Use the coupon code TTG121. Click apply code. Price drops to 1,100. You see a laptop, that's you're getting one. There's 13 left. You don't have to enter your address. You'll get a welcome email after you join with instructions how to claim the free laptop. And again, we cover the shipping. We ship anywhere in the world. As long as you live on planet Earth, we'll get you that free laptop. All right. And then you got the double your money back guarantee. You join tonight, go through our courses, pass our quizzes, attend one study group. If you can't make $1,100 back at least once during your membership, I'm going to give you back $2,200. Dead serious. I'm not kidding. I stand behind this platform, guys. I stand behind this platform that we have created, and I put my money where my mouth is. And that's how I prove it to you. I don't think anybody else would be willing to do that. Honestly, I don't know a single other company that offers double your money back. I mean, you got to fight these other companies to get your money back, never mind more than what you actually paid. So, and again, if you have questions, text us 786-505-4049. All right. So I'm going to be really paying very close attention to earnings. Now, I want to have a conversation with you guys here real quick, because in 2022, I gave you guys my belief on what I thought was going to happen in the markets in 2023. And my initial thoughts were that after the markets bounced in November, that you would have a strong end to the year of 2022, because I expected lighter than expected inflation in December, and I expected the Fed. I expected the Fed to, after you got the after you got the multiple consecutive months of lighter than expected inflation, I did not anticipate the Fed moving their target rate higher. Okay, that I did not expect. So I was a little surprised when the Fed did that in December. And that made my thoughts of closing the year strong. That got rid of that. That was this. So that happened because the Fed raised their target for their Fed funds rate. So I was right about this move, because we called the long in November. But I thought we would finish the year somewhere around here is where I thought we would finish 2022. We finished 2022 here. So I was wrong about that segment of how we would close the year. Like where the market closed, I was a little off on where the markets were actually going, where the markets actually closed. But I thought that you would have a situation where the markets would again crash in the first half of 2023 as the recession shows up, and then bounce back into the end of the year. As time has gone on, because I made that call months ago, as time has gone on and I was watching every single person come on CNBC, every fund manager, every hedge fund manager, every analyst, and every single market technician, everybody was coming on television saying the exact same thing. Down first half, up second half. And when I was sitting there, I'm like, I hate to see that. Now, a lot of you might be like, well, why is that a bad thing? Like, if all the professionals think the same thing, then why are you upset about that? I'm upset about that because the market never does what everybody expects it to do, ever. I've been doing this for 17 years. When something seems so obvious, it usually doesn't happen. And it usually doesn't happen not just because of fundamentals. It usually doesn't happen because of what's called market positioning. And you have to understand, you really need like an institutional background to understand market positioning and how different hedge funds and mutual funds and all these other, and then you have pension funds and you have all these different type of funds and different type of asset managers, and understanding how they position themselves is really the function of why when everybody's positioned for one particular scenario, it usually doesn't happen because of that imbalance in market positioning. Now, once I start to see this, I start to get kind of like a little iffy about maybe the markets don't crash first half because everybody expects them to crash first half. Maybe that crash comes a little bit later. And I can see that happening, especially if the earnings hold up and if the labor market holds up. If you get a situation where if you get through this earnings season is crucial. If the market does not crack because of this earnings season, then you most likely will see a further move to the upside as funds reposition themselves. Everybody came into 2023 with a base case of a recession. It was just a matter of how bad will the recession be? People are talking about, well, my target's 3,400, mine's 3,200, mine's 3,000, mine's 280 or 2,800. It just became a matter of what's your target to the downside. But everybody was in agreement that it's recession and downside. So what ends up happening is people get overly positioned in defensive stocks. What are defensive stocks? Consumer staples. Consumer staples, these are the same stocks that we own. We bought these stocks in June. If you guys go back to my June 17th live stream, I announced on June 17th that I was buying recession resilient stocks, specifically in the consumer staples space, to protect against a type of a recession. And they've all done extremely well. General Mills, new all-time highs. Pepsi made new all-time highs. Next Era Energy has done very well for me. These are all stocks that have gone up since June and have also paid me some really nice dividends on top of that as well. Okay, so but these stocks have gotten very expensive as everybody has positioned into consumer staples, and everybody's gotten away from the ARC names. Everybody got away from the ARC names. You look at the way ARC traded going into the end of the year, it was a joke. ARC, all your high growth tech stocks got crushed. A lot of that was tax loss harvesting, like cutting your losers to offset gains in other areas, right? But those stocks got killed. The positioning of this market going into 2023 was defensive, give me all of it. Growth and risk, I want nothing to do with it. And what are growth and what's risk? Growth and risk is crypto. Growth and risk is the Cathie Wood ARC names, and it's the high growth tech stocks, right? That's the growth, and those are the risk asset areas of the market. Then you get into 2023, and the first 2 weeks of the year, what happens? You get a phenomenal jobs report, and you get a phenomenal CPI number. And all of a sudden, the probability of a soft landing starts to increase. Now, I can still say the probability has gone up, even though I still believe we have a mild recession. It's all a matter of just probability, because that, my friends, is how risk management and algorithms work. They work on probabilities, and they work on numbers. They work on mathematical equations. And when you get a situation going into 2023 where market positioning is so defensive and is so bearish, when you get data that supports the bullish scenario and the probability of a soft landing increases, what ends up happening is the risk assessment of those portfolios is now off. It is, and people say, okay, well, if the probability of a soft landing has gone up, we need to reposition and start to buy some of the risk assets in case we do get a soft landing. We can't just be fully positioned for a recession. If the probability of a soft landing is increasing, we need to adjust our positioning. And my friends, that is why what sectors of the market have gone down and what sectors of the market have gone up in the first 2 weeks of 2023. I'll tell you what's gone down: all your defensive stocks. Healthcare has lagged. Consumer staples has lagged. Even energy has lagged. What has led? Technology, high growth. Did you know the worst 3 Dow performers of 2022 are so far the top 3 performers of 2023? All the stuff that got killed in 2022 is trading higher in 2023 as that market repositioning, that repositioning takes place as the probability of a soft landing increases. Why do you think Bitcoin went to 21K? Bitcoin is the prime example of a risk asset. It is not a coincidence that Bitcoin has rallied to start 2023. It is not a coincidence that stocks like Salesforce, that stocks like Meta, okay, it's not a coincidence that these are the type of names that have traded higher. Look at ARK. Look what ARK has done so far in 2023. That's ARK. That's ARK. But then meanwhile, take a look at healthcare. What's healthcare done? It's just gone sideways. Healthcare is a defensive sector. That's what's happening. This is why market positioning and understanding market positioning is so important. That is why you can have a scenario where the markets continue to push higher if earnings hold up, because nobody is positioned for a soft landing. So you're going to get this rebalancing, this repositioning, even though a hedge fund manager might say, I still believe we have a recession. They can't just be 100% positioned for it. They have to manage risk. They have risk assessments that need to be conducted and risk mandates that need to stay in line. Otherwise, their investors are going to pull their money from them. They don't have the ability to just say, I think there's going to be a recession. I'm just going to buy put options and I'm going to do nothing else. A hedge fund manager can't do that. A hedge fund manager needs to be positioned for what they think is going to happen, but they have to have the other side of the trade hedged in some sort of fashion. And that's what you've seen so far in 2023. That's why this earnings season is so damn important. Joel is not going to go about this on their own. Joel is the newest member of the TTG family. We got to welcome Joel. There's 12 of those laptops left now, guys. Hurry up and grab one. As long as you see one in your checkout cart, that's how you know you're getting one. Go to ttgoffer.com, enter the coupon code TTG121, click apply code. The price will drop to the 1100. Check out. Grab it while you still can. It's going to be $13.50 tomorrow. Save yourself the $250. You get a free laptop too. Don't forget. A free laptop. We cover the shipping. We ship anywhere in the world. You don't have to enter your address to get the laptop. You'll get a welcome email after you join with instructions how to claim it. It's our gift to you for joining the family. And you got the double your money back guarantee. If you can't make the $1,100 back at least once during your membership, I'm going to give you back $2,200. That's how confident I am in the platform that we've built. Go to ttgoffer.com, enter the code TTG121, click apply code. Price will drop to $1,100. Check out, and you guys are good to go. I'm telling you, if there's ever been a time to get yourselves involved, I mean, this earnings season is going to be huge. If the market holds up during this earnings season, you're going to see people chase. You're going to see that repositioning. You're going to see people chase. It's no longer about the Fed and inflation. It's all about earnings and the labor market. That is what you need to be focused on. Jabbar knows what's up. He knows what to be focused on. Welcome to the family, Jabbar. We're now down to just 11 laptops. Guys, these laptops are going to start to go quick now. Once we get under 10, they always fly. Remember, as long as you see a laptop, that's how you know you're getting one. Because once 11 transactions are completed, it will no longer show up on the checkout page. You have any questions, do not hesitate. 786-505-4049. Text us. Numbers right there at the bottom of your screen. So let's talk about these earnings. What are some of the companies that are coming out with earnings? All right, what are some of the companies that are coming out with earnings here this week? Oh, I just had my list up and I just had my list up and I just accidentally X'd out of it. So give me 1 second and I will pull up my list of earnings for you guys. Okay. All right. So let's go through this. Here are the big names that you need to be paying attention to. Okay. Here are some of the big names that you guys need to be paying attention to for earnings. I'm going to go day by day. All right. And we're going to pull the stocks up on my screen. Okay. We'll go day by day. Starting tomorrow, major companies that you want to be paying attention to. Really? It's just 2 of them. All right. I'll give you 3 of them. All right. 3 major companies you're going to be paying attention to for tomorrow. 2 are financials, 1's an airline. Okay. The financials are going to be Morgan Stanley. Okay, now financials have been extremely strong so far to start off 2023. Do you want to know why financials are extremely strong to start off 2023? Because if you avoid a recession or if you have a mild recession, financials are going to do very well with higher interest rates. If you have a severe recession, financials will do poorly. I don't think you're going to have a severe recession. Okay, I think you're going to have a mild one. Okay, so these, all your banks, your financials will do better with higher interest rates. Okay, so, but the banks that you're getting, you got your commercial banks, your consumer banks rather, on Friday. JP Morgan, Bank of America, Wells Fargo, right? They all rallied their face off. I mean, this is one of the sexiest candles I've ever seen from JP Morgan on Friday. It's one of the biggest candles I've ever seen JP Morgan make in my entire life. But you're getting a lot of your investment banks are now going to be on Monday. Morgan Stanley. You can't walk into a Morgan Stanley branch and open up a checking account, right? They don't do consumer banking. So this is going to be more around, wealth management, mergers and acquisitions, investment banking, trading. Like that's going to be Morgan Stanley. You're also going to get Goldman Sachs. Okay, Goldman Sachs is also tomorrow morning. So Goldman Sachs and Morgan Stanley. Citizens Financial is another bank that's coming out tomorrow. That's more of a regional bank. That's another one that you can really focus on for the strength of the consumer and the state of the consumer. Goldman Sachs and Morgan Stanley won't really necessarily give you as much of an inside look into the state of the consumer as a Bank of America, a Citigroup, a Wells Fargo, a JP Morgan would. A Citizens Financial can also give you some of that insight. That's tomorrow. Then you have United Airlines. United Airlines, this has been one of the craziest moves I've ever seen the airlines make. United Airlines is a stock that I own in my long-term portfolio. I've owned it since 2022. I bought American Airlines all the way back when all the chaos was happening. It was the only airline that I bought when all the chaos was happening. I'm up triple digits on this position. But I'm thinking about shedding it, honestly. I just think that these mid to high 50s is too much resistance. And I'm actually thinking about maybe selling my United Airlines position, taking my triple digit gain, and then allocating that money elsewhere. And what I might be doing, and this is something that you guys are hearing for the first time here. I haven't even mentioned this to my TTG family yet, but I will be this week. And I might even be doing a workshop with members live about this. But I'm going to be moving some of the money that I'm peeling off. Like if I peel off some positions, like if I peel off some energy positions, or if I peel off like this United Airlines position, and maybe take some of the money that I still have on the sidelines, and I'm probably going to put some of that money to work in two specific areas. One will be gold related. The other is going to be emerging markets. So for the emerging markets, I'm probably just going to go after like ETFs, like an IEMG is a really good emerging markets ETF. That's IEMG. Okay, IEMG. I'm going to probably buy some of this. I already have emerging market exposure, but it's not a lot. And I think I want to be a little bit more heavily weighted on some of these emerging market ETF and this emerging market ETFs, considering specifically highlighting Brazil and India. I really like India. I really, really, really like India. And I also do like Brazil, but I really, really like India. So you might see me go after some emerging market positioning. And this is something that if I do pull the trigger on, I'll obviously let all of my members know. It'll be in my long-term portfolio, and I'll probably couple it with a workshop for you guys as well. But this is the first time that you guys are hearing this. So I wanted to kind of put that out there and just let you guys know that that is something that I'm considering and something that I'm thinking about. Okay. So long story short, those are the earnings for tomorrow. Okay. Those are the earnings for tomorrow. Let's head on over now to, Wednesday, the 18th. Wednesday, the 18th. Okay, what are some of the earnings that you have on Wednesday, the 18th? Okay, you got Charles Schwab, you got Prologis. I actually am pretty interested in this in Prologis earnings. Prologis is a REIT. It is actually one of the REITs that I was looking at maybe buying for 2023. I own American Tower, AMT. American Tower is a name that I already do own. And I was considering coupling that with Prologis. So I'm interested to see. I don't own Prologis yet, but I was considering it. But so I'm interested in see what these earnings are going to be on Wednesday. All right. Then you're going to also be getting Kinder Morgan. Kinder Morgan, another oil and gas play. I don't really necessarily think it is that important. You got Discover Financial. Discover Financial is another company that's reporting on Wednesday. Again, gives you a little bit more insight into the consumer. But that stock has been really, I mean, I think you got a really nice support level at 90. I mean, this is a stock that I think you guys can all really take a look at. I mean, look at the weekly chart on Discover. I mean, you had this all-time high here. I mean, look at that support. That's a nice double bottom at the weekly 200-day moving average. I mean, that's kind of sexy. So that's a low volatility financial that some people can look at. These are the companies that are coming out there on Wednesday. Not a whole lot on Wednesday. Okay, not a whole lot on Wednesday. Then we get to some of the more fun ones. Okay, because as you get to the 19th on Thursday, you get a company that I do own, a consumer staple, Procter & Gamble, right? So I bought Procter & Gamble on June 17th right there in my long-term portfolio. Stock is currently trading up here at 151. I own Procter & Gamble as part of my consumer staple holdings. My consumer staple holdings include Procter & Gamble, Johnson & Johnson, Pepsi, General Mills. Well, I mean, Constellation Brands really isn't a consumer staple. It's, you know, beverages and alcohol, but not a consumer staple. So anyway, General Mills is one of my best performing consumer staples. I mean, this stock is just an absolute monster. But yes, Procter & Gamble, I do own it in my consumer staple basket. So we'll see about those earnings. And then you have Netflix. I'm excited for Netflix. This stock has been so fun to trade these last couple of months. We've traded Netflix a lot in True Trading Group. It was actually one of our biggest winners. It was actually one of our biggest winners of 2022. This swing trade was one of our biggest winners of 2022 on Netflix. So, you know, it's actually been, well, for me at least, you know, for P&L wise, that was one of my biggest wins of the year, was actually this swing trade. But we traded it, you know, like day traded it. We traded a bunch of times within the, you know, the last 2 or 3 months or so. But I'm really interested to see what happens here with Netflix, because Netflix is right at a major resistance level. This major resistance level that you guys have to look at here. You look at this double bottom. You look at this double bottom back here from before that earnings disaster. I mean, that's about as good as it gets. You still have not filled the gap. The gap fill takes you to 348.50. So you've got the structural resistance here at 330. But the gap fill is 348. So I'm looking to see if there's a situation here with Netflix where we can actually get up and fill that gap. But you got to look and see what happens with earnings. Now, Netflix is notoriously a huge mover on earnings. Okay. You look at the last couple of times that they reported earnings. Okay. This was one, that gap was one earnings. That's a huge move. This gap was earnings, right? That's another huge move. This gap was earnings. That's another huge move. I mean, this stock is notorious for giving you huge moves on earnings. And when you get the earnings, you get a lot of follow through, right? Like you get follow through for the next couple of days. So I'm excited about Netflix for earnings on Thursday. All right. So that's going to be Thursday. You get a bunch of other, smaller financial companies that come out on Thursday as well that are less important, like Truist Financial, M&T Bank, Northern Trust, Fifth Third Bank Corp, like a lot of these regional banks, SVB Financial, you know, so a couple, Synovus Financial. I mean, these are some, now you're talking about some smaller companies that are just not very large, okay, that are going to be less important. And last, but certainly not least, we are going to be hitting off on Friday, the 20th. You're going to be looking at a couple others that are less important. Like you have Schlumberger, SLB, which has been a phenomenal performer. You know, I used to own Schlumberger many years ago. I don't own it anymore. I mean, I used to own this thing like way back in here. So, I mean, I guess honestly, it's better off that I actually, because I was out of it higher than where the stock is now, but I could have got back in it. I mean, you look at this. This stock was $15 in 2020, $15. It's now 58. So I feel like I could have maybe got myself back in this. But whatever, can't cry for spilt milk. You're coming up to a massive resistance level for Schlumberger at 60. Okay, so I want to draw out this $60 level for Schlumberger. This is a weekly chart. Okay, this is a weekly chart. Now, it does not take an experienced technician to look at this chart and say, oh my goodness, look at the support level that you had there at $60. You broke it there in 2018 and the stock absolutely cratered. Now, my friends, you are right back to that $60 level. This is a huge level for Schlumberger. Okay, it is a huge level. So I want to see what happens once you get back to that level. And you have a couple other smaller financials like State Street. You're going to get Regions Financial, Ally Financial. You also get Piedmont Lithium, which is a company that I'm actually going to be paying attention to. Piedmont Lithium. This is a company that I actually have on my radar as a lithium company. Do not own it yet, no position yet, but a beautiful, lengthy consolidation over the last 2 years, right? I mean, this is a really nice consolidation over the last 2 years. And I would be looking to see if this stock gives you a breakout out of this consolidation. That could be a breakout trigger over the next couple of years. This could be a winner for like a 5, 7, 10-year hold. So this is a company that I have on my watch list as a lithium play, but no position on it just yet. No position on it just yet. All right, guys. So those are some of the companies that I think you should be paying attention to this week when it comes to earnings. What I believe is going to happen. Now, again, this could change based on the earnings, but I'll give you my thoughts on what I think is going to happen. Okay. So this is what I think. This is what I want to get into here. I want to take you to a weekly chart, and I want to show you a weekly chart of the SPY. And I want to draw a downtrend resistance line across all these highs. See that downtrend resistance line on the weekly chart? 1, 2, 3, 4, 5, 6. You want to know what else I always want to point out to you? I want to point out to you the 50-day moving average on the weekly chart. There we tested it. It became resistance. There we tested it. It was resistance. There we tested it. It was resistance. And now here we are knocking on the door of that level. What I think you may see here is you get a candle that looks like this on the weekly chart, right? You get a candle that looks like that on the weekly chart. And maybe we push this week to like the low 400s, 403, 404 in that range, but then put in a tail and close the week in like the mid 390s. And then you have a red week the following week. All right. Then you have a red week the following week as you start to then roll into some of your bigger technology company earnings. Because what do you start to get next week? The week after that, guys? We have a different Joel. Joel is trying to sign up, but's having trouble. Joel, I actually see your question, brother. This is actually a different Joel. Joel, you're a trial member. You're trying to get the $1,100 deal. Joel, listen to me carefully, bro. Send a text message right now to 786-505-4049, 786-505-4049. If you are currently a trial member, and I see, Joel, you're trying to sign up, I know you're a trial member, send a text message to the number at the bottom of that screen, Joel, and we will get you set up for that $1,100 price point. Okay? So the way that I think that this unfolds, okay, the way that I think this unfolds is you get a push up to that 50-day moving average on the weekly chart this week, okay, as earnings hold up. You get to the low 400s, maybe 403-ish, right? Then you start to pull back maybe on Friday or Thursday. You finish out in, let's say, the mid to high 390s. You put in a little bit of a tail here on that trend line. And then next week, not this week coming up, the week after that, you start to get the big names. You get Microsoft earnings on the 24th, Johnson & Johnson on the 24th, Verizon, Texas Instruments, Raytheon Technologies, Union Pacific, Lockheed Martin, General Electric, Intuitive Surgical, Danaher. You're getting a whole long list of these companies. Then on the 25th, you get Tesla, Abbott Labs, which is another company that I actually own. NextEra Energy, a company that I own. ASML, I already said Tesla. Boeing, ADP, right? All these companies on the 25th. Then the 26th, Visa, MasterCard, Intel. Then the 27th, Chevron, American Express, Colgate, Palmolive. Some of your bigger companies you start to get that following week. So once you get Microsoft can really set the pace. So now you might get into those bigger companies. And if you start to get an earnings disappointment, then the markets give you their pullback. And you can get a situation where the candles on the weekly chart, look something like this. And then the week after that, you get Apple, you get Amazon, you get Alphabet. You could get a weekly chart that looks something like this. If the tech stocks disappoint, because so far the financial stocks have rocked, and you're really getting mostly financial stocks this week coming up. The following week, you get a lot more stocks, and the week after that, it's basically all tech. So you could get a situation where the market pushes higher as earnings are pretty good this week, and then the following week, and the week after, and the market starts to pull themselves back. You could get something that looks like this, but again, it really will be based on earnings. Earnings is what matters. And of course, the job market, the jobs data that we're going to be getting throughout the next couple of weeks as well. Okay. All right, guys. So there you have it. Those are my thoughts. Does anybody have any questions for me? What about PPI on Wednesday? Does it matter as much anymore? It doesn't matter as much anymore, Reaper, unless there is something shocking in the PPI number. It's widely expected that number is going to come in similar to what you saw in CPI, which is going to be in line with the expectations. The only way that the PPI number would really matter is if it's like drastically higher. I don't really necessarily think, if it comes in line, I don't expect much reaction. I would be surprised if the PPI numbers were significantly higher than expectations. I would be surprised if that was the case. Okay, I would be surprised if that's the case. All right. Badass Bella, yes, you are correct. I should have clarified. Badass Bella says, what about guidance? Yes. So when I'm saying it's all about earnings, I'm just talking about earnings altogether. So that includes the guidance. Okay. Guidance is really what really will matter most. So investors want to know, are companies seeing enough of a slowdown in business where they're going to revise their forward-looking guidance lower as they anticipate a recession? So when I say earnings, I'm just talking about the earnings event, which includes guidance. But Badass Bella, thank you. I should clarify. The guidance going forward is what is most important. You can have a situation where a company, beats prior quarter expectations, but significantly lowers guidance for this year. Their stock is going to go down, even though they beat earnings from the prior quarter. It's all about what are the companies expecting this year. And if the companies are revising guidance down for next quarter, that means they're expecting a significant slowdown over the next 3 months, which would then scare the market to think the recession is here. And then you get the pull, and then you get the sell-off, right? Guys, boom! We got to welcome Joel. So this is the second Joel, 2 different Joels tonight. Welcome to the family. We're now down to just 10 of those laptops, guys. Everybody welcome Joel. Just 10 laptops now remain. They're going to go quick. Make sure you grab yours. Save the $250. The price is $1,350 tomorrow. It's $1,100 tonight, and you get a free laptop. Go to ttgoffer.com. Enter the code TTG121. Click apply code. The price drops to $1,100. You're good to go. Fill out your info. Check out. You're done. You don't have to enter your address to get the laptop. You'll get a welcome email after you join with instructions how to claim the free laptop. If you have any questions, 786-505-4049. Text us. Don't hesitate. All right, guys. That wraps up the educational part of our live stream. So if you're not interested in a membership at all, you can sign off the live stream. Just make sure you subscribe to the channel first before you go. Turn on your notifications. Make sure you never miss out on any of these live streams. I do them 6 days a week. If you are interested, let me actually show you the platform. I'll show you actually the courses, the tools, so you can see actually what you're getting access to for the $1,100. Don't forget, you got the double your money back guarantee, guys. You can't make back $1,100 at least once after going through our courses, passing our quizzes, and attending one study group. I'll give you guys back $2,200. So let me show you the platform. Of course, you guys are going to be getting access to our chat room. Our chat room is where the mods and I share our screen. We're with you from pre-market till after hours every day. We are on the microphone, calling out our trades, answering questions, providing market commentary, and giving you all of our real-time trade alerts. You'll also get the mobile app that lets you see the screen share, listen to the audio, receive push notifications when the moderators enter and exit trades. This way, you guys never miss out on anything that's going on inside a chat, even if you're not in front of your computer. You also get 2 private study group sessions with a mod where you can help speed up your learning curve. You get Benzinga Pro's real-time newsfeed, live breaking up to the second news alerts. That would cost you $1,000 if you went to Benzinga directly on your own. It's included with your membership to TTG, along with everything else, for just $1,100. You get TradingView's premium charting software. That's about $600 a year if you go to TradingView directly. It's included with your membership. You get the Trade Ideas scanner. That's a few $100 a year. It's included with your membership. It streams live on our platform every day. You'll get ETNA's simulator, lets you trade stocks, options, crypto, futures with fake money, but with real-time data. So you can practice implementing what you're learning. You also get our own scanner that lets you create custom scans. You get dark pool data, unusual options activity, and options flow. Stuff that would cost you hundreds of dollars a year, guys, if you were to pay for it on your own. It's included with your membership. You also get a trading journal that tracks all of your trading, breaks it down to the numbers and statistics. You can see what you're doing wrong. And a social sentiment scanner will make sure you know what stocks are being talked about most on social media. You'll get analyst ratings on any stock, so you know how many analysts have a buy, sell, or hold rating on a name, whether or not there's been insider buying or insider selling, and what the short data is. Every day, the mods and I publish watch lists of the stocks we're looking at with a game plan and how we plan on trading them, so you always know where to focus your attention. Then you get all the courses as well. The courses are a simplified yet expanded upon version of what I learned working at the fund in New York. There are no upsells for courses. There are no VIP courses that cost more money after you join. We don't play those games. You join TTG's platform, you get access to all the courses and all of the tools. Beginner courses, advanced courses, options, swing trading, trader psychology, crypto, futures, you name it, we've got it. It's all included. Then you get a video library. The video library has about 400 hours of workshops that we've conducted with members covering different topics, and you can actually start attending these live once you become a full-time member. Guys, it's time you invested in something real, something that can actually give you real education, give you access to real tools, and have you be part of a real community. Now, I can't guarantee that you're going to be successful just because you join True Trading Group, but I can guarantee if you do join, if you go through our courses, if you pass our quizzes, if you attend one study group, and still can't make $1,100 back at least once during your membership, I'll give you back $2,200. That is what I can guarantee you. I can do that because we've only had to give a refund to 2.8% of our users, and 78% of our members renew their membership. We're 5-star rated on Trustpilot with nearly 2,000 reviews. Go check them out. If you have any questions, text us, 786-505-4049. You got a couple of laptops remaining. All right? 10 left. Go to ttgoffer.com, enter the code TTG121, click apply code. The price drops to $1,100. It's $1,350 tomorrow. After midnight tonight, it's moving to $1,350. Save the $250, grab the free laptop, get the double your money back, get your butts in chat. Don't trade through this earnings season alone. It's make or break. These earnings are going to dictate what this market's going to do. Recession, soft landing. Recession, soft landing. Earnings are going to answer that question for the next month. For the market direction, at least. I already told you what I think happens. Be there with me to trade it live. I'll see you guys all in chat tomorrow. Thanks for joining me tonight, folks. If you haven't done so already, subscribe to the channel, smash that like button, turn on your notifications. I'll see you all in chat tomorrow.